Hello friends, in the current video we will work out the problems of insolvency, right? So it is a continuation video of our first video of insolvency explanation and the Garner versus Mora case law. So in this video we will work out the problems of insolvency, right? Now, in the first question, just see this question number 9. The balance sheet of a firm A, B, C sharing profit and loss in the proportion of 2 by 5, 2 by 5, 1 by 5 showed the final position on dissolution as under. Capital A, B, C we have given cash and directly we have given realization loss, right? And in adjustment show necessary ledger accounts assuming C is insolvent and unable to bring anything in respect of his deficiency. So we are not going to get anything from this fellow on the deficiency of insolvency from this fellow, right? So what we have to do, we need to prepare the ledger account. So directly, as realization loss is directly given, hence we don't prepare realization account. Instead we prepare cash account and capital account. So I'll prepare directly first. So capital accounts, there are 3 partners. So this is capital account. So I'm using pen, but will write with marker pen so that sketch easily it is visible, right? Then we'll prepare cash account, right? So we'll start. So this is capital account, and this one is cash account, right? Now, once it is done, the partners are A, B, C, A, B, C, cash account. Now see the question. The simple procedure of dissolution only. It is an insolvency of one of the partners is nothing but the extension of dissolution, right? So don't be worried to so much what to do. Just I have explained in the earlier video. You can watch earlier video and try to understand the basic crux of the insolvency. While working out, even I will explain. Just concentrate, right? So first we have given capital accounts. So when you come from the asset side, first cash account. So in cash account we need to write 2 balance brought down. Opening balance is 5,000 given in the question, right? This 5,000 we have written. Then capital account. Capital is credit balances, therefore by balance brought down. So 15,000, 5,000 and 2,000. These are the capital balances. Next we have given realization loss 17,000 and the ratio is 2 to 1. So it should be distributed among the partners. So realization loss will be debited to realization. Directly we have given. So we need to distribute 17,000 divided by 5. So the loss would be 6,800, 6,800 and 3,400. So when I have divided 17,000 into the ratio of 2 is to 2 is to 1, then I got this. Once this is done, the next is what we need to do. We need to see whether we are going to receive anything from the estate of the partner. No, we are not going to receive anything from the partner's estate. Then what we have to do, we need to see how much loss. So the next thing is loss due to insolvency of partner. So loss due to insolvency of, who is insolvent in this case? C. So how much loss we are getting? How to calculate loss? The comparison of capital balances. So capital always shows credit balance, but in this case debit is more. So capital, which balance? First I am taking debit balance 3400 minus capital credit balance 2000. Hence 1400 is the loss. Whose loss it is? Loss due to insolvency. Then what to do, sir, with this loss? This loss should be shared and borne by solvent partners. In this case, the solvent partners are A and B. The question arises, which ratio? In the ratio of capital as well as adjustment of profit. So in this capital is what? Capital ratio is 15,000 is to 5,000. Therefore it is 3:1. In this ratio, this loss is to be borne. But what did we discuss while discussing Garner versus Murray case law? That the solvent partners, that is A and B, has to prove their solvency by bringing in cash. How much? To the extent of realization loss. Actually, in realistic scenario, they don't bring, but it is a book entries. It is book entry. So therefore, for that we need to pass the journal entry. What is the journal entry? Here I am writing the journal entry is even. The journal entry is cash account data. How much? The realization loss. By whom? A's capital to B's capital. That is 6,800 collectively 12 and then 13,600, right? So 13,600 they are going to bring. So for this we need to pass the entry. In cash account we write to A's capital to B's capital, that is 6,800. Now in capital account we write by cash 6,800, right? Once this is done, the next is what? The loss which we have already calculated, 1400, has to be borne by in this ratio. So when you divide 1400 into the new ratio, though their capital profit sharing ratio is different, 2:1, but we are not considering, we are considering this. Why we are considering? It is provided in the court verdict of the court stating that the insolvency loss should be borne by the solvent partner in the capital ratio. We already discussed in the Garner versus Murray. So that's the reason we are following that case law, right? So when you divide, this comes to 350, right? Then this comes to 1050, right? So these people has to bear the loss. A has to bear 1050, B has to bear 350 as the loss. So for bearing this loss, we pass a journal entry. What is the journal entry? The journal entry is solvent partner's capital to insolvent partner. So who are the solvents here? A. So A's capital account data, B's capital account data to who is insolvent, that is C's capital. How much amount? That is 1050. Just now what we have calculated, 350, and collectively it is 1400. Once we have written this, then the next thing is ledger posting. So in A's capital we write A and B's capital to C's capital 1050 and 350. And in C's capital we write by A and B's capital, collectively 1400, right? Once this is done, close the capital accounts, and always bear in mind that insolvent partners capital account will always tally. That is 3400 and 3400. So this will get tally. There is no doubt, because based on this only we calculated the loss and we adjusted the loss. Then we need to calculate to make the summation, close the capital accounts of other partners, right? So this is 21,800, 21,800. So 21,800 minus, we need to do 6,800 minus 1050. So we will get 13,950. This balance will be transferred to cash account, to cash, right? In the same way, the next partner, that is 11,800, 11,800, 11,800 minus 6,800 minus 350. So comes to 4,650. So these are the balancing figures which we got and will be transferred to cash account. In cash account we write by, here it is debited, in cash account credited by A's capital and B's capital, that is 13,950 and 4,650. Once this is done, bear in mind our cash account should tally, otherwise we will be wrong. So if the cash account is not getting tally, then it will be wrong. So when you make the summation, it comes to 18,600, and debit side even 5,000, 6,800, 6,800 comes to 18,600. So this is the way we need to work out the problem, right? So these journal entries are very, very important besides other journal entries of dissolution. Clear? So in this question, I try to help you out with regards to working out this problem, right? So we'll take up one more problem to understand better. So one problem is not enough to understand the basic crux of the insolvency of the partner. So we'll understand one more question. All right, see the second question, what it says. ABC are partners sharing profit and loss in the ratio of 4:3:2. The balance sheet prepared as on 31st December 2005 as follows. So we have given cash, debtors, stock, land and building, creditors and capitals of the respective partners. And they agreed to dissolve the partnership on this date. To prevent the disastrous loss on sale, A agreed to take over the stock at a valuation of 1,500 and debtors at a valuation of 700. The land and buildings sold at an auction 2,700. Show by means of ledger accounts how the partnership books will be closed when C being insolvent and unable to get anything, unable to provide anything in cash. The same case, right? But when compared to earlier question, we were given in the earlier question realization loss, but in this question we have not provided any realization loss, but we need to prepare the realization account even. So we are preparing three ledger accounts, that is, one is realization account, cash account, another one is capital account, right? So we will proceed with this. So the same procedure of what we call dissolution. Start from asset side. In cash account we write two balance brought down. Opening balance of cash, in this case 1,500. Then assets. So first entry, assets should be transferred to realization. The entry would be realization to assets. So we have assets, debtors, stock, land and building. To debtors, to stock, to land and building. I'm writing abbreviation. So how much amounts? 1,000, 2,000, 5,500. So 1,000, 2,000, 5,500. So we have transfer assets to realization account. Once it is transferred, come to the liabilities, creditors. Creditors will be transferred to realization. Credit side, creditors. Amount is 3,500. Right? So entry would be creditors to realization. Then capital. Capital showing a credit balance, that is 2,000, 2,000 and 2,000. Sorry, creditors showing 4,000, 2,000 and 500. So these balances we are writing by balance brought down, opening balance, that is 4,000, 2,000 and 500. Right? So once we have written the capital balances, next come to the adjustment. They agree to dissolve the partnership. Right. A agrees to take over the stock at a valuation of 1,500 and debtors 700. So when one of the partners takes over the asset, the entry would be the respective partner's capital accounted to realization. So A is agreeing to take over. In A's capital, we write to realization. So he is taking over two assets. One is stock at a valuation of 1,500 and debtors 700. So 15 plus 7, 2,200. So here I am writing 1,500 plus 700. Collectively we are writing 2,200 in A's capital account. Right? We have debited. So as it is taken over by A. And in realization we write by A's capital. That is 2,200. Clear? Then next. The land and building are sold at an auction for 2,700. So land and building is sold. Right? So what is the entry when land and building is sold? Cash account data to realization. In cash account we write to realization. Amounted to rupees at what price we sold off? We sold off at 2,700. 2,700. And in realization we write by cash account 2,700. Right? So once this is done, then as I told you in the dissolution event, once everything is done, we must see is there any liability still payable or not. So when you see the liability creditor is payable, regarding the payment of creditor, nothing is provided in the question, though we need to make the payment as we have already discussed in the dissolution. Right? In the same way, the liability should be paid off. So liability paid off entry would be, now liabilities are in realization, hence realization to cash. In realization we write to cash 3,500. See, this payment we are making, though still it is not stated in the question, even though we need to make the payment, bear in mind, by realization 3,500. Once everything is done, close the realization account, find out the profit or loss on realization. Right? So make the summation, debit side summation we are getting 12,000. So both the side I will be writing 12,000. Then minus this comes to 8,400. If you deduct, we will get it 3,600 is the loss. This loss is to be distributed among partners by capital account. This capital account A, B, C. In which ratio? Always bear in mind in OPSR. What is old profit sharing ratio of these people? The ratio is 4:3:2. So in this ratio we will distribute this 4:3:2. That is divided by 9. Then 4 is equals to, so this will be 1,600, 1,200 and 800. Right? So once we have distributed this loss, it will be recorded in the capital account as to realization. Here it is credited, realization, capital account it will be debited. So respective amount 1,600, 1,200 and 800. Clear? So once this is done, we need to find out loss due to insolvency of the partner. So we'll come to the working loss due to insolvency of, who is insolvent in this question? C is insolvent. This fellow is insolvent. So C's loss due to insolvency of C. So the same procedure, check the debit balance is 800, credit balance is 500. So you must adjust the loss of 300. So capital debit balance minus capital credit balance. Debit balance is 800, credit balance is 500. So therefore the loss is 300. This loss is to be distributed, borne by whom? The solvent partner, that is A and B. Right? So in which proportion? In the ratio of capital. So capital ratio, what is the capital of A and B? That is 4,000 and 2,000. So 4,000 is to 2,000. That is capital. Therefore, so 2 is to 1 will be the ratio. What is the ratio? 2 is to 1. So then this fellow will be 200 rupees and this fellow will be 100 rupees, will bear the loss. Clear? But prior to this, as we have already discussed, that the solvent partners has to prove their solvency by bringing cash. To the what extent? To the extent of realization loss. So for that, entries I have passed in the earlier problem. Directly I'll do the ledger posting. So entry would be cash account data to partner's capital account, solvent. To who is solvent here? A's capital to B's capital. So that loss is 1600 and 1200 these people will bring. And in capital account we read by cash account 1600 and 1200. This will be nothing, this fellow. Right, once this is done, now distribute this loss. For distribution of this loss, the entry would be A's capital, B's capital to C's capital. That is solvent partner's capital to insolvent. So insolvent partner's capital we write to C's capital, 200, 100 and by A and B's capital in the C's column 300. Once this is done, close the capital accounts. As I have told you in the earlier problem even, always the insolvent partner's capital account will tally because we calculated the loss and we made the adjustment. Right? So this 4 plus 1, 5,600, 5,600. So 5,600 minus 2,200, 1,600, then 200. So we are getting balancing figure is 1,600. So we need to write to cash, right? Then this fellow, that is 3,200. 3,200. So 3,200 minus 1,300. Then it is 1,900. And this it is debited in capital account to cash, in cash account by B's A's capital and B's capital. That is 1,600 and 1,900. So once this amount is debited in the capital account, credited in the cash account, our cash account should tally. So when you make the summation, our cash account is tallied with 7,000 rupees. So this is the way we need to work out the problem of insolvency. I hope I explained you and tried to help you out with regards to insolvency. This is a very simple concept and you can easily deliver in the examination, provided you just bear in mind the Garner versus Moreira case law and the step what I have explained in my earlier videos, right? Thank you very much, and do subscribe my channel and motivate me to make more quality videos, right? Your subscription and your likes and your comments, of course, plays a very vital role and important role in enhancing the efficiency in delivering the lectures, right? Thank you very much. Thanks for being patient, and thanks for being listening and understanding. Thank you.